Okay, dear student, let's start the second lecture on Finance Act 2025. Paper is taxation variant, which you people are studying, that is UK variant, easy to pass, I would say. In the previous class, I've given you a very small homework, and the homework was employment income is £90,000, and you are just required to calculate income tax liability. So let's just start from the homework. You can see employment income I've written on the spreadsheet. Obviously, on entire 90,000, we are not supposed to pay income tax. In the previous class, we have discussed around one or two questions in which we discuss how to apply income tax rate if someone is having non-saving income. Employment income is one of the examples of non-saving income. So the question is employment income is 90,000. You are required to calculate income tax liability. Obviously, on entire 90,000, we are not supposed to pay income tax. We will deduct less personal allowance. We will deduct personal allowance, which is 12,570 in Finance Act 2025. Previously, it was also same. Taxable income. Simply I take 90,000 and then take this. Just a minute, just a minute, just a minute. Okay. So simply 90,000 minus 12,570 gives us taxable income 77,430. Obviously, on entire 77,430, you cannot apply directly 40% income tax rate. First, first we have to utilize the basic rate band. After that, we'll go for a higher rate band. So let's calculate income tax. Basic rate band ends at 37,700. Applicable tax rate is 20%. So I'll take 37,700 multiply by 20%. That gives us 7540. Total taxable income students is 77,430. Out of this 77,430, we have applied tax rate on 37,700. So whatever amount out of 77,430 is left, that actually falls in higher rate band. And income which falls in higher rate band in case of non-saving, applicable income tax rate is 40%. So we'll take 77,430 minus, I've taken 77,430, and from this 77,430 I will deduct 37,700. That gives me 39,730. Applicable income tax rate is 40%. Okay. So simply add them, you will get income tax liability. 7540 plus just a minute. Mm-mm, mm-mm, mm. Just a minute. Here comes income tax liability total amount. Income tax liability is 23,432. Okay. So students, till here we have discussed only one source of income, just a non-saving income. Obviously, there's a possibility, and which is very much possible, that individual does not have only one source of income. What about the individual who is having, let's say, non-saving income as well as saving income? Saving income, the simplest meaning of the simple saving income is interest income. So if someone is having non-saving income as well as interest income, then how do we calculate income tax liability? And what are the rules regarding saving income? How do we apply income tax rates? Let me share the OneNote with you. Then we are discussing if someone is having interest income as well, then how do we calculate income tax? Okay, students, if the individual is having non-saving income as well as saving income, then what are the rules? How do we calculate income tax? Before that, just see the tax rates, and these tax rates, they will be given to you in exam as well. Non-saving income, basic rate band, applicable rate is 20%, higher rate it is 40, additional it is 45. In case of saving income, interestingly, basic rate band, the rate is 20%, higher rate 40, additional 45. But relating to the saving income, there are four additional points which you need to know. What are those four additional points? Saving income. There are four additional points relating to the saving income. Number one, if individual is a basic rate taxpayer, then that individual gets nil rate band of £1,000. How that works, we are discussing right now. Don't worry at all. But right now, you just need to know one thing. If individual is a basic rate taxpayer, basic rate taxpayer gets nil rate band for the saving income £1,000. Obviously, income tax rate will be 0%. How do we decide someone is a basic rate taxpayer? Just wait for that. If someone is a higher rate taxpayer, higher rate taxpayer. If someone is a higher rate taxpayer, then nil rate band for the saving income is £500. If someone is so rich that that person is an additional rate taxpayer, they do not get any nil rate band for their saving income. Additional rate means having taxable income more than 1,25,140. So someone is an additional rate taxpayer, then no nil rate band. For the saving income, that individual does not get any nil rate band. Finally, there's one rule relating to the starting rate band. Starting rate band from £1 till 5,000. Applicable tax rate is 0%. These are the four, I would say, additional rules which you need to know when there's a question having non-saving plus the saving income. So someone who's a basic rate taxpayer gets nil rate band of £1,000 for the saving income. If you are a higher rate taxpayer, you will still get nil rate band for your saving income, but this time it is just £500. All this, how it works, let's see a question. Assuming Mr. Y is having employment income, let's say £60,000. Saving income means simply interest income, let's say £20,000. And the requirement is very simple. They're asking us to calculate income tax liability. How do we calculate income tax liability? Very simple. Now we do not have only one source of income, which is non-saving. We are having non-saving as well as saving. Now we are having this individual is having two different sources of income. One is non-saving and another is saving. So while calculating income tax liability, you have to make three columns. One column is for non-saving income. Saving income. And there's one more column. The name of that column is total. I'm just writing directly to save time. Employment income is your non-saving income, 60,000. Saving income is 20. The total becomes comes 80. Personal allowance, first you need to deduct personal allowance from the non-saving income. If you do not have, then obviously I'll go for saving income. Even I don't have saving income, then I'll go for dividend income. Personal allowance 12,570. Okay. Taxable income, simply 60,000 minus 12,570. Taxable income is 47,430. Here comes total 67,430. Now listen, student, carefully. When we apply income tax rate, first you have to apply income tax rate on non-saving income. After that, we'll go for saving income. Let's calculate income tax. Taxable income in the column of non-saving is 47,430. So again, directly 40% is not applicable. First, you have to utilize the basic rate band, which ends at 37,700. Applicable rate is 20%. Gives us 7540. Now from 47,430, I will deduct 37,700. First, you have to apply income tax rate on non-saving income. Taxable income in the column of non-saving is 47,430. Out of this 47,430, we have applied tax rate on 37,700. So whatever is left out of 47,430, obviously that falls in higher rate band. So from 47,430, let us deduct 37,700. I'm getting a student 9730. Applicable rate is 40%. 3892. Now we have to apply income tax rate on saving income, number one. Number two, before applying tax rate on the saving income, you need to decide, we need to determine individual's tax paying status. Because the individual who is a basic rate taxpayer gets nil rate band 1,000 pound for the saving income. If you are a high rate band, high rate taxpayer, then you will get a nil rate band of 500 pound. How do we decide the individual's tax paying status? It is very simple. Status is always decided on the basis of total taxable. If total taxable income is more than basic rate band, look at this. Total taxable income in this question is 67,430, which is obviously more than the basic rate band because basic rate band limits end at 37,700. This individual is having taxable income more than 37,700 and obviously it is not exceeding 1,25,140. So simply this individual is a high rate taxpayer. Whoever is a high rate taxpayer gets nil rate band 500 pound for their saving income. Simply your first 500 of the saving income you will apply nil rate band. So out of this 20,500 we'll take saving nil rate band. Why 500? Because individual is a high rate taxpayer. Into 0% is 0. So your total taxable income when it comes to saving is 20,000. Out of 2,500 we have taken in nil rate band. So we are left with 19,500. Remaining entire 19,500 actually falls in high rate band. The question is, what about the basic rate band? The answer is, if the basic rate band is utilized, consumed by one income, then it is used for other incomes as well. If you see the question, we have already utilized the basic rate band for the non-saving income. So if non-saving income has completely utilized your basic rate band, then obviously your saving income, you will not be getting any other basic rate band. So once the band is utilized by any income, then then it is used for other incomes as well. So simply out of 20,000, remaining 19,500, they actually fall in higher rate band. And in case of higher rate band, saving income applicable tax rate is 40%. Simply your saving income 19,500 into 40%. 19,500 into 40%. I'm getting 7,800. Simply add all of them, you will get income tax liability. 7540 plus 3892 plus 7,800 gives us income tax liability 19,232. Income tax liability. Let's see one more question. Assuming someone is having employment income 20,000 pound, saving income, let's say 50,000 pound. The requirement is same to calculate income tax liability. I really want every one of you to attempt this question. Just pause the video, attempt, then obviously after that you can unpause the video. Employment income is 20. Let's make 3 columns. Non-saving, saving income, and total. Employment income is 20,000 pound. Saving is 50. Total is 70. Personal allowance, obviously I'll deduct from non-saving income 12,570. 12,570. Here comes your taxable income. 20,000 minus 12,570. I'm getting taxable income 7,430. 50,000. 57,430. First, we have to apply income tax rate on non-saving income. Taxable income in the column of non-saving is just 7,430. So 7,430. Applicable rate is obviously 20%. 1,486. Now, student, listen. Again, before applying income tax rate on saving income, we need to check individual's tax paying status, and it is decided on the basis of final column, total column. Total taxable income is 57,430. Total taxable income is 57,430, which is more than the limit of basic rate band. That is why we are saying this individual is a higher rate taxpayer. Whoever is a higher rate taxpayer gets nil rate band of 500 pound for the saving income. So saving nil rate band is 500 pound into 0% is 0. Now, we have to apply income tax rate on entire 50,000. Out of this 5,500 we have taken in nil rate band. We are left with 49,500. But now, first we have to check how much space is left in the basic rate band, because this time basic rate band is not fully utilized. You can see that your non-saving taxable income is only 7,430. Obviously, 7,430 does not completely utilize, finishes your basic rate band. We still have limit in the basic rate band. So far, we have applied tax rate on 7,430 and 500. So look at this. The limit of basic rate band is 37,700, and we have used 7,430 and 500 as well. How much is left? 37,700 minus 7,430 minus 500. I'm left with 29,770. So still basically in the basic rate band, we have a limit of 29,770. Saving income, basic rate band 29,770, applicable rate is 20%. 5,954. Obviously, now we do not have any space in the basic rate band. So the remaining saving income actually falls in higher rate band, where applicable tax rate is 40%. Your taxable saving income is 50. Out of this 50, 500 we have taken in nil rate band, 29,770 we have taken in basic rate band. Now, whatever amount is left, that falls in high rate band. 50,000 minus 500 minus 29770. I'm getting 19,730. 19,730 into 40%. 7892. 59541,486. Your income tax liability is 15,332. Income tax liability. Okay, let me give you one more question. Simply, employment income is, let's say, 75. Okay. We have got pay as you earn is 10,000. Required income tax liability. And the second is tax payable. Employment income, obviously a non-saving income. We have got pay this time as well. Now, what is this pay? Pay means pay as you earn. Pay as you earn. Basically, pay as you earn means the income tax which employee has already paid in advance. Assuming this everything relates to Mr. Y. So employment income of Mr. Y is 75,000 pound, but he has already paid the income tax 10,000. So pay as you earn means the income tax which you have paid in advance. So what are we going to do with that? Just wait. Simply pay means pay as you earn. This is the income tax which Mr. Y has already paid in advance. We have only employment income. So which is the non-saving income? We know that. So employment income 75,000. Obviously on entire 75 we will not be paying income tax. First we will deduct personal allowance. 12,570. 75,000 minus 12,570 gives us taxable income. 75,000 minus 12,570. I'm getting taxable income 62,430. Now let's calculate income tax liability. First, we'll utilize basic rate band 37,700 into 20%. I'm getting 7,540. Total taxable income of this individual is 624. Now, some of the students, what do? They just search for this nil rate band. Actually, employment income is your non-saving income, and on non-saving income, you do not get any nil rate band. Nil rate band rule relates to saving income, not non-saving. And in this question, we only have income from the non-saving income, source of income. Total taxable income is 62,430. Out of that, 37,700 we have utilized. We have applied tax rate. How much is left? 62,430 minus 37,700. We are left with 24,730. On this 24,730, applicable rate is 40%. So I'm getting 9892. Here comes your income tax liability. Income tax liability. 7540 plus 9892. 17,432. Now listen carefully. Mr. Y is having income tax liability 17,432. But in this question, examiner has given us pay as well. Pay means pay as you earn. This is the income tax which Mr. Y has already paid. If someone is having income tax liability of 17,430 but already paid 10, how much is still need to pay? Less pay as you earn 10,000. So here comes income tax payable. Income tax payable is 7,432. Now look at the rule. If pay is more than income tax liability, if you come across a question where interestingly, let's say pay is more than the income tax liability, then difference will be your tax refundable. If pay becomes more than income tax liability, then difference is your tax refundable. But there's another possibility which we have in this question. Pay is less than income tax liability. If your income tax liability is more than pay, then difference is tax payable. Now difference is your tax payable. So simply if pay is less than income tax liability, then difference is going to be tax payable. If pay is more than the income tax liability, then difference will be tax refundable. And normally when we are working as an employee, then we pay tax as under pay, that is pay as you earn. Let me write one more question for you. Assuming someone is having property income. Property income again is a non-saving income. Assuming property income is, let's say, 60. Saving income is 30,000. Required is income tax liability. I really want every one of you to pause the video, attempt this question, then you can unpause the video. Student, while solving this question, you have to make three columns. Why three columns? Because property income is a non-saving income and saving is saving. Non-saving income. Another column is saving income. Total. Property income 60,000. Saving is 30. Total becomes 90. Personal allowance 12,570. 60,000 minus 12,570. We are getting 47,430. 77,430. Taxable incomes. Obviously, first you have to apply income tax rates on non-saving income. Income tax. You can see that taxable income is even more than the basic rate band in the column of non-saving. So entire 37,700 will be utilized at the rate 20%. 7540. Taxable income in the column of non-saving is 47,430. Out of this 47,430, we have applied tax rate on 37,700. How much is left? 47,430 minus 37,700. So total taxable income in the column of non-saving is 47,430. Out of that, in basic rate band, we have taken 37,700. The remaining amount is 9,730 from the non-saving income, and applicable rate is 40% because basic rate band is fully utilized. Now we are in higher rate band. 3892. Now, again, before applying any income tax rate on saving income, we need to check individual's tax paying status. And individual tax paying status is always determined on the basis of final column. Total taxable income is 77,430. Total taxable income is 77,430, which is obviously more than the basic rate band limit. which shows that this individual is a higher rate taxpayer. And whoever is a higher rate taxpayer gets nil rate band £500 for the saving income. Saving nil rate band. £500 into 0% is 0. Total saving income is 30. Out of their 3,500 we have taken nil rate band. Remaining 29,500 actually falls in high rate band because basic rate band is already utilized by the non-saving income. So out of this 3,500 we have taken nil rate band. The remaining 29,500 falls in high rate band. Applicable rate is 40%. 29,500 in, I'll take 40%. So I'm getting 11,800. Income tax liability I'm getting is 23,232. Income tax liability is 23,232. Okay. Now let me give you one question. Assuming employment income is 25,000. Saving income is 10,000. And the requirement is very simple. I really want every one of you to calculate income tax liability. Just pause the video, then attempt the question, then unpause the. I hope you have attempted the question. Again, we'll be making 3 columns. Non-saving, saving, and total. Obviously, employment income is a non-saving income, £25,000, 10,000, 35. Personal allowance, 12,570. Just a minute. $25,000 minus 12,570. I'm getting 12,430. 22,430. Taxable income. Obviously, first we have to apply tax rate on non-saving income. Let's see. 12,430. Applicable rate is 20%. 2,486. Okay, now. Again, before applying any tax rate on saving income, you need to decide individual's tax paying status on the basis of total taxable income. Now, you can see that total taxable income of this individual is even lower than 37,700, which is the limit of basic rate band. So this individual is having total taxable income even less than 37,700. So this individual is a basic rate taxpayer. Whoever is a basic rate taxpayer gets nil rate band £1,000 for their saving income. So saving nil rate band £1,000, 0% is 0. Out of this 10,000 we have taken in nil rate band, remaining is 9,000. Entire remaining actually falls in basic rate band because this individual's total income is even less than 37,700. So 9,000 into 20%, 1,800. So here comes your income tax liability, 2,486 plus 1,800. Students, I'm getting income tax liability 4,286. Okay, now listen to me carefully. Again, it's just a second class. I don't want that class to be very long. And as I already mentioned, we will have one class on average just 40 minutes, even it will be little bit below 40. In today's class, we have discussed if there's a saving income as well, how to calculate income tax liability. We did not discuss the rule of starting rate band yet. In the coming class, class number 3, we will be discussing again how to calculate income tax liability, but in lecture number 3, we will discuss if how to utilize and where do we use starting rate band. Plus, if individual is having dividend income as well, then how do we calculate income tax liability? So in the coming class, actually, you will be learning the application of starting rate band, as well as if individual is having a dividend income as well, then how do we calculate income tax liability? So these are the two things which we will be covering in the next class. So thank you very much.